This is a short trade settle for CVS. CVS Health Corporation, a company in the healthcare sector and healthcare plans, had a report after the bell for the second quarter. And CVS actually posted another earnings beat and actually raised guidance, had same-store sales increase by 8% in the second quarter. We had analysts expecting sales to fall by 0.5%. Some of the revenue from the company's retail segment even rose by 6%, really due to some of the earnings call ended up by increased prescription and some of the front store volume, including a whole ton of sales of the COVID-19 testing kit, which really partially offset the decline in some of the diagnostic testing and COVID vaccine. So we'll see what happens. Right here, this is what happened. We ended up rallying right after the bell, up 6.6% in a single day. And here we are at a key pivotal inflection point right here off the primary downtrend line, off the February reactionary highs with multiple and continuous reactionary highs that help validate that when we are at a key pivotal inflection point. I had mentioned in my previous video around this, I want to say 92.50 range. And again, if you're bullish on CVS, I'm only going to give you every single key inflection point where a company is going to spit fire in either direction at this key pivotal time. And if you were long, you were there to start scaling in. I wasn't going long. I was waiting for a breakdown sell signal below this primary uptrend line to move to the downside, and really bulls and dip buyers ended up taking this, putting in a beautiful inverse head and shoulder classic looking bottom, broke out of my primary downtrend line here off the May reactionary highs, and took out the neckline of this inverse head and shoulder top and never looked back. And here we are again at a key pivotal inflection point, and where the risk reward ratio is skewed to the downside. Again, some stops up above, maybe this prior gap, previous gap of which would take out that primary downtrend line. And again, short traders want to see a little bit of a pop in the morning, and followed by a rejection down to the downside here for 980 for my first price target for a 3.2% drop, 96.44 for a 5.6% drop, which will more than likely start to coincide with that 50-day moving average down to 93.25 for an 8.5% drop, 91.62 for a 10.2% drop, and a revisit to this primary hidden trend line here for at least a 10.8% drop with multiple and continuous reactionary highs to help validate that.